Okay, good morning, everybody. I want to give everybody a breakdown, some of these very, very basic essentials to stock trading. With the economy tanking the way it is right now with this pandemic and the oil crisis we're experiencing, now is a great opportunity for those who have thought about investing to get into the stock market. Typically, it's unreachable for most. Once stock prices skyrocket, your ability to purchase multiple shares gets reduced very quickly. On the screen here, you'll see this is who I use. It's E-Trade. There's a lot of other platforms, TD Ameritrade, yada, yada, yada. Most financial institutions also have online type of stock accounts. Also, you can use your a personal broker, but you're going to pay fees. That way, I prefer to put my own money and invest my own money how I see fit. Also, it's a good learning curve. A lot of people should learn about finances and investing. It's something you shouldn't leave to somebody else. Should always be knowledgeable in all these aspects of your own financial fitness, we'll call it. So if you were to go to a site like E-Trade, you're going to type in www.etrade.com. It's going to pull in a login page. You can either sign up or log in. So if I was to log in, I would punch in my username, create a password, hit log in. Boom, I now am able to get into my account, which once I log into my account, it's going to pull up a list of things. There's actually a screen that's going to showcase all of the things that E-Trade does for you. This is a snapshot of my portfolio. Just a portion of it. These are just a handful of stocks I own. I have more. Also some cryptocurrencies I've been recently researching and investing in. Today we're going to kind of talk about a few of these key selections and my reasoning behind purchasing these key stocks. There's some things you need to notate when you're looking into a stock you need to be aware of before purchasing to establish the validity and the strength of the company. You got to make sure the stock you're picking is viable. It has the potential for increase if it appears to be going into a bullish market. Bullish or bearish are two terms you'll hear when you're looking into stocks. Bull meaning charging up like a bull would with his horns. A bear would be swiping down, which means the downside of the stock as it declines on the curve. So with this in mind, we have CCL, which is Carnival Cruise Lines, MGM Grand Casinos, Nokia, and West Texas Intermediate. This is a crude oil supplier out of Texas. Nokia, obviously, if you're familiar with cell phones and technology, they've been around for a long time. They are entering the 5G sector, so that's something I've been looking into as a lot of Wi-Fi and other digital capabilities come online. 5G is going to be something we're going to all be aware of. MGM, as we know, it's just a casino mogul. They own and operate under MGM casinos, multiple across the country. CCL, as we know, they're stationed out in the ocean right now. They can't allow anybody to take any type of cruises through them. So with that said, I'm going to give you a snapshot into CCL. You'll see the last price that it's traded at was $8.49. It's had a lot of movement in the last few weeks. During this pandemic we've been going through, CCL has been rallying on its own. And not because of market news or press releases. Basically, it's been rallying based on some news presses and also investor trading. So there's not a lot of viable information provided with CCL that would lead you to believe it's on an uptrend. It's actually gone down $8 a share and rallied back up to 16 and then back down to 8. So it's pretty volatile right now, but it does have a great stability and a long history of stability. So those are things you're going to look at when you're choosing a stock. Is it strong? Can it produce short or long-term gains? And what is your option? Why did you choose that stock? And what is your investing goal? Short-term, mid-term, long-term? Okay, so for instance, when you're looking at a stock right now in a declined market like CCL, we are going to look at that. This right here, and what I tend to like to look at with a stock is its 5-year projection. So I usually click on the 5-year. That gives you a good snapshot of the trustworthiness of a company, its stability. Do you believe it's going to be around? Is it a new kid on the block? What is this stock capable of doing for you? So when you look at this, you're going to see from 2016 to 2020, Carnival Cruise Lines has been relatively stable. It's been performing over $40 a share for the last 5 years, up until the last few months, where it's then dropped over 400% down to $8 a share. So if you're looking at it from a practicality standpoint, will people go back and start taking cruises again? Of course they will. So 5 years worth of history shows you it tends to land right around the $40 range, 40 to 45, and it's gotten upwards of 65. So at an $8 investment point, to me, it's a no-brainer. That's a win-win all the way around. The minute someone starts to, it's going to jump, it's going to double at a bare minimum, and I guarantee it's probably going to come back up to the $40 range again, as it's always performed there. There's no reason why it wouldn't, unless for some reason people stop taking cruises. So just to give you another example of this 5-year projection, there's other things you're going to want to look at. You're going to want to look at third quarter earnings year in and year out from the previous year to the next year. Those are good indicators of a newer stock, not so much an established stock like CCL. So when a new stock comes on the block, sometimes you can judge these uptrends and the breakout points by looking at their third quarter earnings from the previous year. If there's 2 to 3 years of third quarter projections where the revenue and profits are increasing every third quarter for 3 years in a row, that's a very good indication this stock is strong and it's growing, and it's gonna uptrend. It's gonna grow up. If you look down here, just to give you guys an idea of what these bars stand for, these are buy sell. Green represents buy, red represents sell. If you look here, you're gonna see this big tall red line. And in retrospect to the graph up top, the line graph, you're going to notice that that's where this selling takes place, is where this decline takes place. So you see a dip up here, but you see a rise down here. That means people sold off, so that when people got scared in early March, investors pulled their money, and the stock plummeted. So that's a good, you got to watch these motions down here. There's a lot more to this than what I can explain today, but this is just kind of the general consensus. So we're going to go into MGM. This is another one I hold. So if you look, a very similar thing is going on here with MGM. Okay, MGM has performed very well from $20 to $25 per share for the last 5 years. This is a really stable stock. It does have its peaks and its valleys. But with that being said, look where we are now. So MGM is trading at around $10 a share right now. Where does it perform? You guys can see clearly, baseline all the way, $20 minimum. But it's the last few years, it's performed at 25. I mean, we can follow this 25, even $30 with dips to 25. So it tends to rally around $25 to $30. And it capped at $35, $34 back in early 2020, probably January. So for a $10 share investment now in MGM, where do you think people are going to go when they can go back into the public and we can get back to real life? They're going to go back to the casino. They're going to go back to their habits. They're going to go back to doing the things, and they're going to invest, and they're going to gamble. And this stock is going to go right up, back where it was, and you're just going to double or triple your money. So be smart. Think about these things from a practicality standpoint. It's not about investing. You didn't want to invest here, of course not. You didn't want to predict the crash and then get in and then lose your money. But this is a time, it's very hard to predict a stock's movement when you're following something right here. If you see a low valley where it dips a couple dollars, it's going to climb back up, and then it just kind of rallies. It finds a holding place, and then it occasionally has its dips, and then it peaks, and then it dips, then it peaks. And so when you have a very sharp decline, especially on a very solid performing stock over the last 5 years, these are just no-brainers. There's other stocks that are a little trickier. We won't talk about those. No-brainer. This is a win-win. CCL is a win-win. Getting into a couple other ones right here. So we got Caesars Entertainment. This is also on the entertainment spectrum of investing. CCL's 5-year. If you look at that, it's much different than MGM. We go back to MGM. Look how stable MGM is. Even at the $20 mark, there's not so much volatility with a lot of this up and down movement. So we're going to go back into Caesars and look at Caesars. Caesars is all over the map. It's from $5. It's from $14. If we follow this across, we're hitting 12. We're down to 6. We're back up to 10. Then it has a rally point through 2017 to 19 where it peaks at 14, drops back down at the end of 2015 down to about $6 a share. It finally rallies itself back up over the year, breaking around February 2020 to 14 bucks, and boom, down to about $4 a share. It got blasted. So this is another one I hold. It's not as big of a winner as MGM in my opinion. Does it have hope? Yes. I may sell this one and reinvest that one into MGM because MGM is looking like it's a better investment and there's going to be a better high-end potential for sale and for a short midterm investment. With that being said, let's go into analysts. What are the analysts saying about Carnival? Just to give you guys an idea, what analysts do is they project the movement of a stock based on its past history. So they're going to find a high, a low, and a balance, a medium ground. And that's always, it's like Goldilocks and the Three Bears, right? You got the hot, too cold, you got just right. You got the middle zone. That's something you can usually count on. These are smart investors that are doing these analytics. So they have had experience watching the market, seeing the performance, and what that does here, if you watch this. So this is CCL. CCL, and this number here is not what it's selling at now. It's selling at around $10 at the moment. CCL I think is down to 8. It really got hit hard. If I look in, it is in the $8 range. So January 2020, we're into March, reaching 2021. The projections are, as I mentioned before, it shows a 5-year history of stabilizing around 40 to 50 bucks. So you got there's a very high potential that it's going to get right back up there again. On a low, if we shoot on the low side and we just double our investment, $20, it may rally up to 20 by the end of the year. It just depends on how the market rebounds, how the cruise industry rebounds from this, how many people are going to cruise, what kind of loss is going to be suffered during this first quarter. Will there be any bailouts for Carnival Cruise Lines? We don't know that yet. But comfortably, we can assume this way. Comfortably, we can assume it's going to hit the $40 range. Right now, you're buying it at 8. You're going to quadruple your money on this one. These are winning stocks. I mean, let's go back here and let me just show you here Carnival Cruise Line. So we get back into here. This is the 5-year. So this is what we're looking at based on those analytics. It's performed at $50 a share. The high 40s to 50s. It's stable there. It's comfortable. It knows the territory. People have been taking Carnival Cruise Lines for years, so it's a very safe bet. Looking back here, this is what the experts are saying. They're saying it could top $55. I mean, even playing it safe, you're going to hit 40. So these are smart investments. All I want you guys to say is during a downturn like this, when you have money, don't waste it on foolish things. You're frivolously spending money. Put it somewhere where you're going to get a big return. Right now, the banks are offering no returns right now. Everybody's kind of uncertain about what's going on out there. So we need to be proactive. We need to think outside the box. We need to do things that we're not comfortable doing and getting involved in different types of investments. And another thing you want to do when we go back to my portfolio view here is if you look here, you want to invest across multiple sectors. You don't want to have your eggs in one basket. Yes, these are all stocks, but yes, they are all different sectors. We're talking fuel, technology, entertainment, and I guess the CCL would also be entertainment and travel. So we have entertainment, travel, technology, and fuel, oil, crude oil. So and energy, which is what oil is considered. It's the energy sector. So you want to make sure that you guys are well invested because they're all going to perform differently. If you look here, CCL has been getting hammered. It's just down. I've had heavy losses, but they rally, they rebound. I'm not trying to day trade right now. So if you look at what we got going on here, during all of this, Nokia's been pretty stable. Nokia's got some great press releases. If you look into Nokia in the 5G sector, there's discussions with Nokia and LG, and Nokia's making acquisitions. They've acquired a few different companies through this process and acquired 3,000 patents on the microprocessor side. So you got to do your own research. You got to read the news reports. You got to find the press. There's not just one source to find press. You need to cross-check your references. Companies do put out false press releases to rally a stock. Shareholders do put out press releases because good press it will rally the price up and the company makes money. So it makes the market, it drives the market, these news press conferences and these press releases. So the key thing to look at, especially with Nokia here, is that Nokia, when you do the research, in a volatile economy like it is right now, Nokia is stable. They're growing and they're acquiring companies right now. That doesn't happen. The rest of these, West Texas, it's getting its ass handed to it right now. But it is one of our national stockpiles of fuel. So I got a very good feeling that West Texas is going to come out of this. Whiting Petroleum, as I posted yesterday, it got hit really hard. It got put into bankruptcy. West Texas is not there yet. I hope it's not, and I hope Whiting Petroleum does pull out of the bankruptcy status. It may divide, and it may go bankrupt. It may have to create a new entity and start all over again. So it just depends on what it does during these fuel wars going on with Saudi Arabia and Russia. Nokia, again, lots of press releases. MGM, CCL, those are holders. Those are things you just buy right now because they're cheap. $8 and $10 a share. You hold on to those for the short, long term, 12 to 24 months. You're probably going to quadruple your money on each one of those. They're probably not going to see much more growth in that because if you look at the 5-year projections, you see where they cap out. That's kind of their sweet spot. So Nokia has a lot of unlimited potential if they do what they're supposed to do and they really break into the 5G sector. They've been stagnant for years, but if you read the press releases, they're doing a lot of research and they really want to come back. They want to break into this market and they want to grow. They want to make a name again for themselves. So they've teamed with LG. There's some co-op deals going on between those two, which is a good sign. And W2I, it's fuel. So it's going to come back and we're just going to cross our fingers on that one. We'll get into cryptocurrencies maybe later tomorrow. I'll do a video on those just for beginners to get you guys started. In order to get funds into your trade account, there are other trade investment sites. I do recommend you get Ameritrade or E-Trade if you're looking to do some serious investing. Cash App, if you have Cash App, everybody, for beginners, Cash App's great, but it does have limitations. Not all the stocks listed on the NASDAQ, the S&P, are available to purchase, so you do have limitations. CCL's on there. I know Caesars is on there. I don't think WTI or Nokia are on there. So some of these great underdogs that are out there, you got to look for them. These are good buys, but they're not. So if you're a beginner and you want to just pick up some CCL or some MGM, you can use Cash App, but I recommend if you're going to take this serious to buy into and open an account through E-Trade or Ameritrade. And the fastest way is to go to your bank. There's a form on here you'll download for wire transfer. You'll take that wire transfer form to your bank. You'll submit it. You'll tell them the amount of cash, and then the money will be in your account within a couple hours. Then you can buy and sell as you wish. We'll get more into trade rules when it comes to trading, buying and selling unrealized income, and the rules behind your trade allowances. You're allowed so many trades, but that's a whole nother topic. So guys, I hope this was helpful. If you have any questions, please comment below. Let me know if there's anything you need. I do recommend everybody get involved with this. Do take your finances serious. This is a time of opportunity for all of us, and I wish you all the best. Thank you again, and I'll talk to you soon.